According to a new shocking report from RBC, Canadian real estate inventory is rebuilding, and it's rebuilding rapidly. Could this be to do with the amount of people that are hitting their renewals and unable to afford it? The fact that new buyers are completely priced out the market and have been obliterated by the housing bubble. So Better Dwelling reports Canadian real estate inventory is rebuilding very rapidly, according to RBC, guys. And I want to take you to my Twitter real quick just to show you. This is a real good illustration of the bubble. I took this chart from one of Better Dwelling's previous articles that we've covered many times. But clearly, when I put it like this, you can see that the trend for mortgage debt is way down here. And then you can see how it just explodes away from the trend in around 2002, 2003, 2004. Around that time was when the bubble really started to explode, and it has just continued until you got to that 2020 where it just went absolutely parabolic, and the amount of debt took on has just gone insane. I mean, I don't know how many times I have to repeat myself to all the trolls out there, but how you look at whether or not something is a bubble. And one thing you've got to keep in mind and bear in mind here is that if debt growth is surpassing wage growth and surpassing economic growth, that is a bubble. That is literally a bubble, because think about it logically. How on earth can that be sustained for decades and decades and decades? It can go along for a long time because you have people taking on more debt to pay off existing debt, and it works in a cycle of interest rates going down. But when you've got a cycle of interest rates that are going up, not down, the opposite happens. It becomes completely unsustainable, and obviously you guys know we've hit that right now. So Canada's largest real estate markets are seeing inventory rise. Major markets are seeing home sales weaken much faster than inventory. Home sales fell more than new listings in Toronto, Vancouver, Montreal, Calgary, and Fraser Valley. This has generally been the trend over the past year, helping to ease pressure on these markets. We suspect many sellers are timing their move ahead with interest rate cuts, with expectations of a rebound in demand, explained Rachel from RBC. She adds, a rise in new condo completions in the Toronto area and struggling homeowners, including investors, are likely compelling more property owners to sell too. And then you can see what's going on here with the chart. But you know, it's really interesting, guys, because they're obviously saying about interest rates. We're going to get onto this in a moment. Bank of Canada's June rate cut was like bringing a butter knife to a gunfight, and I totally agree with that. I think it's absolutely hilarious. New inventory remains resilient, but as the above data shows, this is the story of lackluster demand. The start of the easing cycle has motivated more sellers, but buyers have been taking a step back, likely wanting to see how this situation evolves, or just being totally priced out the market, and the only people who were buying in these big markets were investors anyway. I mean, that is obvious. Just look at the average and median income. I mean, yes, you're going to have people that are duped into those markets regardless, who just believe the narrative and they just don't question it, where they're like, wow, so many people are moving here, it's just going to boom forever, but I'm not going to ask how much they're earning. That doesn't matter. It doesn't matter that they can't afford the houses. But anyway, it's just kind of hilarious. The bubble just speaks for itself sometimes. So basically, you've got home prices. Canadian real estate prices are slowing as sales plummet. So you got Vancouver that is pretty much doing nothing when you think about inflation, because this isn't in real terms, by the way. This is all nominal. So you got the Fraser Valley that is down 3.2% June 2024 year over year. Calgary's up 8.5%, but remember, they have the highest inflation rate in the country in Calgary. So even though that is a lot higher, it's nowhere near as high in real terms as this chart suggests. And anyway, you've got Edmonton also in Alberta, which has really high inflation, but not as bad as Calgary. And then you've got Toronto down 4.6%. So that's more like 15% if you're looking at real inflation. And then you've also got Montreal, which they're currently waiting on data for by the looks of it. So it's interesting because, you know, there was all this talk about the Bank of Canada cutting rates, and that was just going to start this thing off, that you were just going to have this massive explosion in the amount of people buying and the demand. And we just never saw that. That just never occurred. And I totally agree with the tone of this article. With national home prices treading water, real estate inventory growing, slowing and housing affordability still atrocious, last month's quarter-point rate cut from the Bank of Canada, while helpful, was the economic equivalent of bringing a butter knife to a gunfight. That is a much more funny and comical way of the way I've been describing it, but yeah, I totally agree with that. Canadian real estate and over-leveraged borrowers need a bigger savior. A measly 25 basis point drop in average mortgage rates only translates into a little more than 2% improvement in payment affordability, home buying power. So it's interesting when you look at real residential property prices in Canada, they've come down, but they're still at these massive highs. If we go all the way back to the time where the bubble started, we are well off where the trend should be, which is probably down here around 80 to 100. So it has a long way to go. And I like this chart because it's actually adjusted for inflation. And it actually comes out of the US, the St. Louis Fed, which is hilarious because you cannot find a chart for Canadian property prices adjusted for inflation. We have all these stupid indexes that are incredibly delayed and not accurate, but they don't actually give us real inflation adjusted property prices, which is very important. So obviously what's happening in Toronto, not good, and what you would expect to see those bubbles crack first because they are the biggest. Obviously Toronto has been the main focus really for the past 4 to 8 years. So it's no wonder that you're seeing sales that absolutely plummet to the lowest levels ever seen. I mean, once the investors leave, what do you really have left in these markets because you priced out all the locals? And once again, I want to emphasize that doesn't mean people weren't buying, locals weren't buying, but it just means that the market wasn't composed of majority of local people, because you look at their income and you're like, yeah, there's no chance of that. The amount of people earning over $200,000 in Toronto, while there is a fair few people, it's not responsible for 60 to 80% of the demand. It's mostly speculators and investors, and mostly domestic investors as well. And just to illustrate this, I pulled up this, which goes back to 2021 when Better Dwelling put this out, but just as a refresher, if you weren't following the channel back then, if you look at what was happening in Ontario, so Ontario residential real estate owned by investors, the share of Ontario non-owner occupied housing stock by city and grouped by the date the home was completed. New construction are homes completed after 2016, while total is the housing stock. So when you look at it, guys, 60% of new construction owned by investors. So again, who was the main buyer in these markets? It was not just average people who could afford to buy a home. And then you look at the total amount of investors in that housing market for all housing stock, and it's 30%, which is just an insane number. That should be more like 10% maximum when you really think about it. And then you've got Elliott Lake, Kenora, Kitchener, Cambridge, Waterloo. I mean, we covered last week a bunch of losses from that area that were just staggering. And you've got, look at the amount of new construction that was being bought by investors, 46.6. And a lot of people declare that they're living there when they're actually not. So then that obviously affects what you're getting here in the figures as well, because you can't see that those places are actually owned by investors. And the reason they do that is to get financing rates which are lower. It's totally illegal and it's fraud, but it's become rife in Canada for people to think it's acceptable to do this. And obviously bank risk departments can't factor in how many people are lying in that way and committing fraud, even though they know it's a lot. You've had Barrie, another place, Woodstock, and Toronto here, new construction, 40% were investors. So again, when you go through, they're not small places that we're talking about. We're not talking about small towns. These are all the towns where prices absolutely exploded. And that's the point that I'm trying to get across to you guys, is that the end of this bubble is mostly comprised of speculation. You've got that 25 basis point cut that happened from the Bank of Canada. You've had the CPI report that came out for June, which was last week, and it was minus 0.1%. So a little bit of a pullback there, taking a breather from all these gains that you've had in the inflation rate over the past 4 months. I mean, you're already, guys, when you look at what is here, up to the Bank of Canada's 2% target. So, you know, it's crazy. And then you've had this little pullback. We'll continue to see what happens. happens, but with the economy failing more and more, it looks more likely that you're actually going to see inflation come down because people are reducing their consumption, which then leads to lower profits. It leads to companies having to reduce their prices to try and incentivize people to come in, but people haven't got the money. With inflation rising as much as it has over the past couple of months, it is kind of crazy when you think about how bad the economy has been coupled with this. And then obviously we've been over that. We don't need to go over that again. So it's interesting what is going on in this Canadian real estate bubble, guys. If you've enjoyed this video, I'd highly recommend that you check out this video here. And if you're looking for a VPN to protect your privacy, go to expressvpn.com/marketmania. That's the VPN that I use and the affiliate link for this channel. And I will see you in the